Welcome back. You're watching us here on Chartbusters. Let's get straight to the management of Rishabh Instruments. Saw a decent set of numbers in their first quarter post-listing. So these are numbers for the first quarter of FY24, even though we're at the end of the second quarter of this year itself. The revenues were up 38%, partially also aided by other income. We saw the core margins expanded by about 200 basis points as well. Mr. Golia, who's the chairman and managing director of the company, now joins us to discuss the quarter gone by in detail. Thanks a lot, Mr. Golia, for joining in. 38% jump in your revenues as against you talking about, 20 to 22% growth when you joined us post-listing. Wanted your thoughts on how the second quarter has been as well, and will you outpace your growth guidance for this year?
I wouldn't do it for this year right at this point of time, but second quarter has been in line with the first quarter. Similar growth numbers are there. A lot of work has been put by our team, and we'll try to maximize it, but yearly target remains what we are going to do.
All right. Hi, Mr. Golia. Good to speak to you again. So you want to stick to the revenue growth guidance of the early 20s and margin band of around 17 to 20% margin band?
20 to 25% would be, let's say guaranteed. And then, of course, we'll try to keep it what we have done in the first two quarters, which is 37, 38%.
So 20-25% revenue growth and margin guidance, what is the band?
Band, again, similar to what we have done in the first two quarters.
All right. And how should one look at your margins in the first two quarters? Because, core margins, of course, have seen an improvement. Core margins have improved by about 200 basis points. But if you look at a lot of these exceptionals, there is contingent liability, there are ESOP expenses, as a result of which the reported EBITDA is absolutely flat. Yes.
Yeah.
So for the year, can we look at around 18% in terms of core operating margins?
Adjusted EBITDA now. Yeah. But otherwise, let's say before this exceptional item is a one-time item, both for the ESOP. ESOP will continue for some time, but the tax is a one-time item, so it won't come in the future. And accordingly, I can say whatever the numbers are before these two adjustments will continue in the coming quarters.
That's about 18%, right?
18%, that's correct.
All right. What about how is demand on ground? 80% of your revenues comes in, I think, from exports. Are you seeing any signs of slowdown right now? Or are things looking good? If you could give us a sense about your order book.
Yeah, not at the moment. See, everybody is talking about recession in Europe and all. But believe me, at the moment, we don't see any slowdown. The demand is equally coming what it has been in the earlier years. So I believe that at least in this financial year, there won't be any slowdown.
All right, no slowdown in this financial year. I just wanted your thoughts on Poland, because quarter on quarter, there has been a decline in Poland, even as there has been a recovery year on year. By when does that come back to pre-war levels for you?
No, I didn't get your question. Can you clarify your question? Yeah.
The question was with regards to Poland. We have seen a quarter-on-quarter decline in Poland. When do you expect it to improve to pre-war levels?
No, see, one thing is the war has to end. It is not yet ended. And there are, a lot of problems politically at the Poland level with the European Union. So that also has a slight bearing. The other main bearing is the cost of electricity and gas. These are our two major raw materials. They do affect us. So until it comes back, which is again when the war ends, unless the war ends and all these sanctions are removed and everything comes back to normal in terms of gas supply and electricity generation, I think it will continue at least for 1 or 2 more quarters until the war ends.
All right, Mr. Golia, what about your Nasik facility? Could you give us an update about what is your current capacity utilization levels out there? And at peak levels, what can that facility contribute?
Yeah, so at the moment, we are anywhere between 55 and 58% capacity utilization, different products, but we have already started expanding our capacity. If you remember, I told you before that it's not a balanced 58% that we use. There are certain where we use 58 and certain where we use even 70-80%. So we are expanding our capacity. But as of today, yearly in India, we do about, last year we did about 196. And I think going forward up to 350, we can sustain here. But after 350, we will have to expand the capacity.
Mr. Golia, let's go back to your margins once again. You said that you will maintain margins at around that 18% mark, but going forward, the raw material pressures should only ease, right? Semiconductor prices, gas prices, as well as electricity prices should only come down from here on. And you've also renegotiated some of the contracts. So can't we see some margin upside from current levels going forward?
We could and we will see it. But again, we are conservative in giving you this thing. And the other thing is that as you go on expanding, the pressure from your customers also increases. When you want to grow at 25, 30, 35%, you want the same customers to buy more. And you want customers to shift the business from the existing vendor to you. So therefore, you have to sometimes compromise on the prices. We try to minimize it, but it still happens.
All right, and finally, before we let you go, I remember the last time you joined us, you also said that you are looking to expand some facilities or some capacity in your aluminum die casting business abroad. What are the plans out there, and any inorganic opportunities on the cards?
Both are still in this thing. One is what you just said, that we are expanding the aluminum capacity in Poland. It is absolutely on track in terms of building a new greenfield this thing. And there is another acquisition in aluminum space, which is progressing well. We have had negotiations, but we will inform you as soon as something definite happens. But both are in the offing.
All right, Mr. Golia, thank you so much for joining in. Wish you good luck for the remainder of this year. Right now, you are just talking about 20 to 25% revenue growth, but the first half, as you've pointed out, you've done growth of upwards of 35% odd. It'll be interesting to see how you end this year and perhaps whether you will reach that 1,100 crore target that you've given by FY26 earlier than that as well or not. Margins will be key to watch. With that, we'll slip into a short break. As we do that, here's some exciting news. You can now find CNBC TV 18 on WhatsApp, the best of market, business, economy, global news truly at your fingertips. You can add the CNBC TV 18 channel on WhatsApp by following a few simple steps. Firstly, make sure you have the latest version of WhatsApp. Go to the App Store or Play Store to make sure your WhatsApp is updated. Then go to the updates. You will find a button for channels. Search for CNBC TV 18 and hit subscribe. You will get all the necessary updates right on your WhatsApp feed. WhatsApp channels is currently in beta mode, so you may not get this feature. Some of you may not get it. It should be available to all of you in a few days. You can also catch CNBC TV 18 on all other social media platforms, including Facebook, X, Threads, Instagram, YouTube, and JioCinema.